Hey, everybody, welcome to the Smarter Business Finance Podcast. This is episode number 10. My name is Edward. I've been with the company for almost 3 years now, and we got Robert Jackson here as well.
Hello.
Yep. Wanted to talk to you guys about different strategies of who can, who can't get financed, and just tell you just a little bit more about my background and Jackson's background, and what's going to be the best way for anyone to get financed smarter. So Jackson, who do you think would qualify for like financing? When they give us a call, who would qualify for good financing options?
Well, technically speaking, we could help everybody.
Okay.
It's just more or less a circumstance, and everything is a case-by-case basis. We can service everything from an A to a D portfolio.
Okay.
But generally, there's some key features or ingredients that we look for when we're assessing whether we can help. Because that's honestly, we don't even know if we can help.
Right.
And that's what we want to find out. We just want to find out if we can help, and we'll tell you if we can or not. If you're doing your due diligence and you got a competing offer, but there's a lot to be said because of the depth of financing that we have. But what we look for in a transaction is we look for someone that's got more of an established business. We can still do startups as well.
Okay.
They're just a little more restrictive, and we don't have as many options to present to somebody that's got less than 2 years of operational history, whether it be self-employment, LLC, or company filing. We can even use professional licenses like contractor's license or a doctor's license or a medical license to prove time in business. So if you've got someone that's opening a new practice, for example, a doctor that's out of med school, we can actually use his medical degree, his certificate, as a proof of time in business. I did it for a doctor who was opening up a new practice in Washington last year.
Okay.
It's pretty interesting.
Well, it sounds like you've got a lot of experience. Talk to me about how long you've been in the industry. How long have you been here at Smart Equipment Finance?
I've been in Smart Equipment Finance for almost 5 years. I was hired in May of 2018. The company has grown, and I've grown with it, and it's been a wonderful relationship. But like everything in life, the only thing that's constant is change.
Right.
So you have to kind of adapt and overcome and strategize a little differently. And there's clearly some shifts in the industry that people have seen. There have been some of our competitors that have no longer are operational or have completely paused their equipment financing program. To give you a personal story, and I've been given permission to do this from the owners of the company.
Okay.
But for the longest time, as we were growing as a company, we moved to a separate office. And the company had been around for 5 years. Smarter Equipment Finance been around for 5 years. It was growing tremendously. We had grown from a handful of reps to a dozen, and then we got 2 dozen. It was wonderful.
Okay.
And as we moved to the new office, they went to a local bank here. I won't tell you who, but they went to a local bank. They had all of their money in this account for years and years. So they've seen, they see that they could write a check for it and be fine with it. But that wasn't what they wanted. They wanted to build business credit. They wanted to find out how easy it is or how hard it is to get financed at your local bank.
Okay.
And the PGs had like 800 credit scores. And
PGs, when you say PGs?
A personal guarantor. Sometimes we can do a corp-only transaction for well-established and strong businesses that have a commercial credit profile that has some depth and some purchasing power.
Yeah.
But typically, most of our deals require a personal guarantee. It doesn't go on your personal credit. It's a commercial transaction. So it's treated differently than a consumer or a loan. There's a lot of benefits that you can get in these types of transactions. But back to the story, the local bank said no, they wouldn't do it.
Okay.
I guess they just didn't like the collateral.
Why do you think that is? Why do you think the local bank said no?
I didn't think they liked the collateral, quite honestly,
Okay.
Because there would be nothing else that I could see that would be a reason. So the owners of our company called one of the underwriters that we used, and we had an approval in 2 hours.
Nice. Okay.
And it's exactly what they wanted. It was that they needed a trade reference on PayNet, and they got it. So we can finance anything.
Right,
If we can
right, right.
finance furniture for an office.
Yeah.
It's pretty safe to say that we can pretty much finance anything as long as it's not illegal or doesn't fly or float. That's mantra I usually say.
Right, right.
Because it's just not where our specialty is.
Okay. Awesome. Yeah,
Yep.
that was just a lot of good information. When I first started with the company about 3 years ago, and we were in a lot smaller office, your voice is one of the voices that I heard, and giving a lot of verbal judo phrases on the phone, especially when someone didn't qualify. Talk to me about that. What are some examples of people that don't qualify for financing? Who, when you call in, you talk to them for maybe 5 minutes, it's going to be a hard no. Yeah, talk to me about that.
A hard no within 5 minutes is pretty easy to assess, but the key things we look for is repossessions, especially more recent, because anything that's more that's recent on your credit report is more damaging.
Yeah.
Someone that's had a bankruptcy dismissed is a red flag. Any child support arrearages is another.
Why
red
child
flag.
support? Why do you think that is?
Because your taxes and your wages can be levied from the IRS. They can levy your bank account.
Right. Right.
And many of these transactions are set up as ACH.
Okay. Okay. So if the account is like levied or compromised, then they can't make their payment
Correct.
to the. Okay.
Correct.
Makes sense.
It's just protecting their investment, just
Yep.
like anybody would.
Okay.
But those are some immediate red flags. If the bankruptcy is discharged and not dismissed, there's a difference. Chapter 13 or Chapter 7. We can only use the credit profile from after the discharge date. We can't use anything prior.
Understood.
And those we can work with in certain parameters. They're not as damaging, quite frankly, as the others, which is odd. But those are the things that you're going to know. It's just a hard no.
Right.
A startup with a sub 600 credit score, or sub 650 for that matter, is going to be rather difficult on any level.
Right.
There are options that we could present, but they're going to rely heavily on cash flow and bank account balances.
Okay. Got it. So when you first get an app from a relationship that you've built with a dealer or a vendor, and you're talking to the client, what are some of the first lenders that you think about, taking the client to, if it's going to be a good deal?
Well, most of our financing that we have for qualified people, we can do with 0 down to less than 5%.
Okay.
And typically the 5% is just an advance payment or two to show you've got some skin in the game.
Right.
That's really all it is.
Okay.
You're paying for the use of the equipment immediately, and it's credited to the term, so it's going towards the equipment, and it's showing that you're committed, you're ready, you're in it to do that sort of thing. There's with respect to interest rates and payments, it's difficult to say. But I've seen rates somewhere in the range of about 7 to 20%. Is
Based
what you're
on
going to find.
what would determine that interest rate?
The time in business, because the operational history of a business is because the credibility factor. It's a huge indication, because the longer someone is around, they're clearly running their business well.
Okay.
It's not always the case. Lehman Brothers was an example of that.
Yeah,
Arthur
yeah, for
Andersen.
sure.
But so it's there's no guarantee in life that it will be, but you just do your best.
Okay.
But we would look for someone that's got long operational history, a credit score of 650, 700 above. You'd qualify for some of our best financing, often 0 down, up to 250, 300,000 on an app only.
Okay. What's like a 30,000-foot view of the process? Say that you're able to start moving forward with someone. They got a good FICO score. They got a good credit profile. They've got time in business. What's average, like a turnaround time, to get an approval? What does that look like?
In some instances, we get an approval in a matter of hours.
Okay.
Some may take as long as 24 hours from turnaround from application to term sheet if it's approved. If it's declined, we'll know a lot sooner, and we'll share that information with you as well. So you're constantly updated on where you stand, whether it's good or bad news. You need to know.
Yeah. Yeah.
But when we get the term sheet and the terms agreeable, depending on the equipment and the position that it's in, if it's a titled piece of equipment or if it's a non-titled piece of equipment, those are two different factors on how quickly it can close. If it's a non-titled deal, it can close in 24 to 48 hours. I've done them in same day, where the docs went out in the morning and closed it that afternoon.
Okay. How were you able to get, what's the difference between something that's titled and non-titled? Why the difference?
Well, the title has to be reassigned to the new owner.
Okay.
So there's a bit of a process that goes on with our funding department. So our company is compartmentalized into sales, credit, and funding, and they do that because it creates a better workflow for everybody.
Yeah. Like an assembly line.
Correct.
Yeah.
Correct. So it allows each department to focus on their specialty and not be distracted with other things that they don't have to worry about.
Got it. Okay.
Sales is focused on attracting new business. Credit is attracted to getting the deals approved at the best possible option we can.
Yeah.
And then our funding department is wrapping up on the back end. They're getting insurance. They're doing title reassignments, which can take a few days. There's got to be power of attorney signed because you're notarizing an official documentation that your business is taking ownership of this new piece of equipment. Whereas with a non-title piece of equipment, we just need the serial number for a UCC filing.
Okay. Understood. What do you think are, some of the best moments that you've had here at Smarter Finance? Whether it was closing a deal or closing out a year strong, give me some examples of that.
I had a customer, I don't know if I can mention his name, but he was in Texas.
Okay.
And he was purchasing something called a kill truck. It was an oil kill truck. And what it is when an oil well is depleted,
Yep.
they have to bring in these trucks that have a hard clay, silica compound thing that closes the hole hundreds and hundreds of feet down. And he charges immense amounts of money for this service.
Okay.
He had excellent personal credit, but he was technically a startup because he only had a year and a half time in business.
Okay.
And it was a $269,000 piece of machinery.
Yeesh. Okay.
But his business was doing about $500,000 a month
Nice.
from his trucks that he had. I don't know how he purchased them, but he had some trucks already.
Right.
So, and I was able to get the deal approved.
Okay.
And it was towards the end of the year. It was in December, and he wanted to do it for the tax deduction. So he was pushing to really get it done. But it was really we developed. He came back and we did a couple of other deals, incidentally enough. But it was one of my biggest transactions I had ever done with the company. I mean, up to that point, I think it was my largest deal. But it allowed me to hit a certain milestone on the year. They have the company has an event they call President's Club, and they'll take you and your spouse on a vacation somewhere.
Yeah.
Last year we went to Florida, so it was pretty fun. But that allowed me to get that bonus for that year, so it was pretty cool.
Nice.
And yeah, that's what I could think is probably the biggest one.
Okay.
What about you, Edward?
So, I mean, what would you like to know about?
Oh, let's see.
Ask.
Tell me a little bit more about high down payment lenders.
Yeah, we've got a few of them, less than a handful, where they're going to require, 30 to 40%. And the reason being is because it's going to be a high risk type of a transaction where they're either new to the industry, new in business, their FICO score or credit profile isn't where it should be. And to overcome that risk, there needs to be just more capital put down, so it reduces the overall financed amount. I've got one or two of those approved. I've only been able to complete one because it takes a nice chunk of change, out of their bank account, and it's a little tough for people to come up with 30 to 40% down. Just is what it is, but. For the most part, people that do get approved, they'll move forward with that type of a transaction because they're out of options. That's it. There's nowhere else for them to go.
I think that you could probably say that program is more like a Kickstarter program kind of thing.
Kind of, yeah. And if they're able to get approved, it'll give their business the adrenaline shot that they need to be able to, get all the things that they want in life for their
Right.
family. So it just is what it is, and
Right.
that's what I talk to them about. Is not just the equipment, but once you get the equipment, what is it going to do for your family? Once you start to pull on their heartstrings and remember their why, you talk to them about that. It just a little bit more incentivizes the transaction.
Right.
Yeah.
And that would lead into credit-based lenders. What do you know about them?
So a lot of the programs that we have, where they're looking at not just the time in business, but they look at the credit profile, and they don't just look at the FICO score, which is what a lot of clients, when they call me, they say, oh, they've got an 800 FICO score, but they've only got 3 credit cards, some from Victoria's Secret or the Gap or something like that. But we do it a little bit more of an in-depth look at the strengths and weaknesses of, each individual trade line, and we look at there's a certain amount of time, and what we look at is an average pay cycle of 24 months. That's the tier level that we look at to qualify that client for, that credit-based lender. And we're looking at the installment lines, not the revolving lines of credit so much. So, yeah.
Edward, what is the difference between an installment and a revolving, and which of those is the best?
Good question. So revolving lines of credit are going to be credit cards. Installment lines are going to be vehicles that you've purchased and you're actively making payments on them. Sometimes you can get home equity, and it'll say installment, or it can be a recreational vehicle and it'll say an installment. What we look at to get deals approved are installment lines of credit. Yeah, and it has to be, consistent payments of at least 12 months. Some lenders, they require 24 months. Just depends on, after talking to the client, what's going to fit best for their type of a scenario. Yeah, we take into consideration, if they want to do a larger down payment or if they want to do something where they're keeping most of their cash in their pocket. So, yeah, just keeping in mind the transaction in your head. Yeah, Jackson, it was nice talking to you, just giving me a 30,000-foot view of, financing options and programs. There are a ton of different programs that are out there, but we're here to help educate, the clients and vendors, anyone that wants to get financed smarter. Only real way that you're going to be able to see what you qualify for is for you to give us a call at 866-631-9996. Love for everyone to give us a call so we can get you financed smarter.
Thanks for watching or listening. If you're listening through a podcast app, we would love it if you would be so kind as to leave a review. If you are watching this on YouTube, it would mean the world to us if you left a comment or gave us a big thumbs up. And lastly, if you're looking at us on the website, if you would let us know an episode that's of interest to you, that would be fantastic.